Hello, welcome. This is SeeWing Yee from the Yee Real Estate Network. For the past 20 years, we have helped many mom and pop investors, for lack of a better term, to buy turnkey remote out-of-state investment properties throughout the US, mostly single-family homes, some duplex, triplex, and fourplex. That's basically it, 1 to 4 units. And we have helped hundreds of remote investors achieve tremendous amount of success over the years. They can buy 1, 2, or 10, or 15 of those turnkey cash flow properties in the best markets in the country and do it in a part-time basis. No hands, everything turnkey, everything's autopilot. We just allow our reputable team in each market with the one-stop shop, the whole enchilada, property management, everything, and those folks will help you to allow your portfolio to become very, very attractive over time. All right, so today we are going to talk about San Antonio, Texas, to give you some update. All right, so let's go from the beginning. Beginning means last year, okay? All right, last year, let me give you one sample to just to share with you the success that we're having for our out-of-state investors. Now we're going to talk about San Antonio. This property we sold to our investor here in California, and that was exactly last year, 12 months ago. As you can see, this property is located in San Antonio. It's a single-family home. It's $138,900, right? At that time, the monthly projection rent was $1,400. And then this individual, although he purchased in cash, and had he did it with 20% down payment, he would achieve monthly cash flow after all the debt obligations of approximately $227 per month, net monthly cash flow. That will give him a cash on cash return of 14% and total return on investment of 40%. Now, and you're wondering why, whether this 40% is a realistic figure. Well, I'm going to prove it to you, okay? I'm going to give you as much transparency as possible, validation, confirmation, whatever you call it. So again, he purchased his property last year, and today, I'm just click on Zillow. As you know, Zillow is not all that accurate, right? But we're gonna do the best we can right here. So you can see the property has been properly rehabbed. This property is a few years old, like maybe I think 13 years old. The estimated Zillow value as of today, August 2021, exactly 1 year later, is $227. Of course, we don't know. By the way, as you can see, right, our investor, our network investor, bought this property in June of last year. So almost exactly 1 year. Now he bought it for 138. Now maybe slightly higher than 138 because he had to overbid for it. And today's Zillow's estimates are 227. So how much money he made? A little bit less than 100 grand in the course of 1 year. I know past performance is not an indication of future success, right? No one have a crystal ball, but just goes to show you what's going on in the San Antonio real estate market. This is amazing. Another reason why is we all know Austin is 1 hour above San Antonio, and Austin's property has skyrocketed beyond imagination. Like last year alone, in this one area of Austin, close to inner, proper Austin, the appreciation was around 50%, some ridiculous amount. So Austin has become unaffordable. As a result, many people are migrating into the San Antonio market, which is only 1 hour away south of Austin. So, but the housing prices in Austin, in the apple-to-apple comparison, what's going on, in San Antonio, is way lower than Austin. So everybody see the bang of the buck. With that said, at the end of the day, the the momentum, the migration, the growth, everybody's converging from Austin Metro into San Antonio because of the large cheaper prices in San Antonio. So you get the bang for the buck. So consequently, San Antonio has grown tremendously over the years, not just last year. All right. So, and the future trend indicates clearly that the population and job growth will continue to happen in San Antonio. So, if you want to know about the rental market in this neighborhood, the northeast part of San Antonio, by the way, if I click on the 2-mile radius of this particular property location, and I look at the 3-bedroom kind of situation, so what does it tell you? It tells you that there are 134 homes that are being rented in the surrounding 2-mile radius of this property. That tells you the rental market is very strong. People are willing to pay. There's a shortage of rentals for single family homes in San Antonio. So this property is about 1,800 square, I believe 1,700 square foot. So if you look at the comparable, it was rented like for 1,500 last year. The rent has probably gone up. You most likely could be able to rent it for maybe 1,600, maybe even 1,650, maybe even 1,700 on this property. So at the end of the day, it's a good area of San Antonio, fast growing. The appreciation and cash flow and the rent will continue to go up. So what should you do? So before the price go crazy, you need to take advantage of it, right? So what does that mean? That means that let me share with you one final sharing on my screen here. Here we are. All right, so our current opportunity that we have in San Antonio for the remaining 2 minutes, I'm going to show this presentation. We have new construction in northeast part of San Antonio, new construction ready to be sold. They are very limited. Only our investors within our network have access to this kind of inventory. They are not open to the public. And this new construction, they're available right now at $235,000. And you put 20% down payment. Your out of pocket, including closing costs, is $63,750, and your rent is approximately $1,750. So the numbers are really, really good. And at the end of the day, your monthly net cash flow is $278. And I'm only incorporating, you put 25% down payment, by the way, you could put 20% down if you want, at a mere 10% appreciation, which could happen for another year or two before it comes down to, who knows, 5% appreciation over time. I don't know. But at the end of the day, the return on investment at the first year is quite attractive. It's 47%. If you add the annual net projected cash flow plus a 10% appreciation at the end of the first year, which is this number, your 23,500 plus annual net cash flow 3,300, your total cash flow accumulation and appreciation at the end of the 1 year is 30,225 divided by your down payment of 63,750 equal 47% return on your investment at the end of the first year alone. Imagine you're going to own this property long term for the next 5, 10, 15 years. What would be your total return on your investment? Multiple times, 10x, they call it, right? 10x, 5x, whatever x. Okay. All right, so that's what's happening. New construction is very hard to get, especially at this price range, $235,000 for like 1,500 square foot, 3 bedroom, 2.5 bath, good location, easy to rent. Many renters in the San Antonio market on a historical basis, and rent is expected to rise, appreciation is expected to rise. So that's what you get. Buy a brand new house with very little maintenance, with warranties and all those kind of things. Property management will easily rent this out property for you, but the demands are very high, the supply is very low, especially this high value new construction, which is very hard to find in anywhere in the country, right? So that's pretty much I have to say. Thank you so much for listening. If you have any questions, feel free to subscribe to my YouTube channel, and or better yet, contact me at my contact information at the bottom of this video, and better yet, just register your email to become a free member of our organization, and my website is attached at the bottom of this video. So on a weekly basis, you will receive free information about real estate education, investment opportunities, and execution of your specific action plan as well. Thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye-bye.